Hello, it's Binni here. Just like to confirm that you can hear me and see myself. Small little, image of myself at the left side of the screen, lower left. All right, today I'll be talking about, like a mid-year update of the market. So this is not something that I always do, but recently I hurt my foot, so I hasn't been moving around. Therefore Sunday, so I try to find something to do. But at the same time, I'm also looking at my portfolio, rebalancing, and then asking myself, what I'm going to do with this market. So I thought that while I'm looking at it, why not just do a live stream and share it with you? Okay. So I think that the session would be maybe like an hour or maybe 1.5. I'm not too sure. So I've estimated that to be until about 3:30. Okay, I hope that you had your lunch already. And if you want to interact with me, I think that you would have to subscribe to the channel. Then you can put your comment in. Okay, so let's get started. I'll be looking at few things. Okay, and do let me know what you're interested later on because I just prepared this. I'll be looking at a 10-year U. Why do I want to look at a 10-year U? That's because, of huge concern to the market will be interest rate. In fact, that every month I look at my bank statement, the amount of money they deducted for interest, because that I'm actually on leverage. I borrowed money for investment for a small amount of my investment. All right. So that interest increase is really like doubling. Okay, so 2 months ago, for example, investment, that I bought just last year, the interest was about 200 plus. I just saw it like this month, right, was at 400 plus. So that's like a double. Okay, so I think that we need to take a look at the 10-year U and then some correlation with the 10-year U. Okay, I'm not sure whether you are doing gold or oil or forex or you are only purely looking into stocks, but I think that there is a need to look at comprehensive, okay, as a whole, because everything can be an opportunity. Okay, so there are some, as I mentioned, some that move very well, some that doesn't. So if you want to have, let's say, money or to make money or to have opportunity, I think we need to expand that. And this is something that I always encourage. Okay, so for myself, that I'm doing stocks, I'm doing forex, I'm doing gold, I'm doing oil, I'm doing indices, and I look at quite a variety of stuff. Okay. All right, so if you'd like to leave me with your questions, then put it at the chat box, which is the comment section. I try to cover as much as possible. Okay, so this slide is about disclaimer. I think as protection to myself, disclaimer to disclaim whatever that I've covered here is just purely educational. All right. For those who don't know me, so my name is Binni here. I think that most of you know me already. All right. So I've trained. I'm investing. I developed system for funds, fund houses, for family offices, for professional traders, for myself as well. So I also train for SGX Academy for, in fact, quite a number of brokers and banks. Okay, so these are the corporate side. And as well as I love the retail market, and that's where I get to meet a lot of new friends who have been with me for decades. And I'm proud to say, and I'm proud to use the word called decades because we've grown together. So I can see familiar faces. Ross also. I know her since she's young. She's still young now. I'm still young now. Yeah. Okay, and it's just that I can't meet all of you, so we are going just to e-meet here. Yeah. Okay, so just to tilt a little bit, okay, to introduce myself very quickly. I know that I've shown these slides for a long time already. Um, so in the morning, now I change my exercise, right? Because I've hurt my foot at the right side quite badly. So now I switched to swimming already, 246. So I don't exercise every day, okay, but I stretch and try to stretch out whatever pain I have. Okay, and you know, you guys know I'm doing the forex, I'm doing the stocks. I train stocks, forex, and I invest quite a lot myself. Really very active. A lot of them are done through automations. Okay, uh, this something is why I added 9 p.m. Sleep. I try to not to do that at 9 p.m. because I think it's too early already. But I try to sleep at 11, you know, and but that's where you know that I actually put in the options, sell, you know, sell the options. Okay, all right. So today let me just take it the other round. That means that the other way around. Usually I would cover, you know, the market updates, etc., and then talk about the Tor cost fee refund, the promotion. Today I want to do it a little bit, so bear with me for those who have done the Tor course and have gotten the refund, because I think that this refund promotion is a good deal. It's a super good deal because you get in cash, right? So in trading, you know, when you have a super good trade, and I won't say I won't say a trade is good, but we talk about the reward to risk evaluation. When you have that reward to risk evaluation that says that you must take it, right? You cannot miss it. I mean, as a trader, I want to do it. So for this Tor course full fee refund, I see that the reward to risk ratio is very good. Is very fantastic. In fact, that I don't really see any risk here. Okay, so if you really want to get educated, try not to browse around the different providers, because you have to know that, I mean, for all these different providers, when they do a free session, I would think that, I mean, even for myself, right? I would think that these are just bits and pieces of whatever that's truly inside. Okay, I mean, end of the day, there is no free lunch. They still want you to go and get the course from them. Okay, so I don't want to give you bits and pieces. So with Tor course break down into 2 modules, module 1 and module 2. Module 1 is free, module 2 is chargeable, but you are able to get the full cost fee refunded. That means that if you pay $700 for the course, you get it refunded as a cash. Of course, there are terms and conditions to meet. All right, in any case that you want to try out the Tor 3.0 indicator that shows the wash and rinse, all right, then you go and take the trial for those who are not with us. Okay, so this is the address here. You can view the YouTube link again to get that address. All right, now why is it that I want to push for this? Okay, that's because if you think about getting trained, right, so we can go to YouTube and watch some videos, we can go to attend some free sessions, listen to talks, etc., here and there. But you know, when you get all these mixed pieces together, then you know, if you are seeing trading as a kung fu, then your kung fu is just from different sources, you know, different type, and you won't get that comprehensiveness. Okay, so rather than to just get snippets of things from everywhere, take the cost. All right, have the cost fee fully refunded from the broker. Okay, the broker who is right now sponsoring for this course is XE. All right, I've shown many times that there is no problem in withdrawing the money. Okay, and that is the most important thing. All right, so the criteria is, if you're assisting XE account holder, yes, you can still qualify. Okay, do contact us for the terms and condition. Okay, there are specific ways to get around with it. You need to make a minimum of 2,000 SGD funding, fulfill 2 standard lots. There are ways to fulfill that 2 standard lots in 3 minutes. Okay, and the promotion until now is 15th of August. I've tried to get XE to keep on extending. Okay, so we are discussing how to say, periodically. So after the first tranche or first round ended, we will discuss whether you are willing to sponsor for the next one. So that promotion fortunately has been extended. All right, but again, I do not know whether they will extend until beyond 15th of August. Okay, until now we are getting the 15th August. Okay, and to be renewed after it has expired. Okay, so when you make your fundings, you reimburse your funding charges. All right, and then if you want to get the $700 cash refund, all right, please remember to use this link, because your account must come from TerraSits. Okay, so this is the condition here. All right. Now, there are videos to help you to manage that two standard lots. So a lot of you guys are concerned about that two standard lots, how to meet it. Yes, you can trade and then accumulate that. Or if you want to fulfill that very quickly, you can try this method. Okay, so that will get the two standard lot fulfilled, right? In less than 3 minutes or maybe less than 5 minutes. You will do incur some losses, which is your spread. But you know, spread might be like $30 spread, but you do get $700 back into your account. Okay, so this is the way to get your cost fully paid for. Okay, so if you take a look at the risk, your risk might be the spread, which is $30. All right, because the other funding charges are all fully refunded, and your reward is $700. 700 divided by 30, I think that is a ratio, the number that you want, that you can work out. Okay, and I think that is a very high reward to risk ratio. Okay, now in any case that you don't like that cost, you don't like my cost, you don't like the support, it doesn't really matter, because then you know you don't really pay for your cost fee. Okay, so give it a try. All right, now just this quickly brief one, in case you are funding, then these are the things I recommend. XE, you know, in terms of the broker, they have cryptos, they have some CFDs, some only, all right, some US stocks and some European stocks, right? And mainly it's into forex, the gold and oil. All right, so these are good enough for you to trade. Okay, now what's in the module number 2, all right, is our secret. So I won't talk about it more, but you do get a whole suite of indicators that we are using, including, all right, the automations. Okay, just to let you know, the top our full automated EA, that means that you put it there and hope that it can give you golden eggs, right? It's going to be ready very, very soon. All right, it's a grid based. We are just solving that grid issue, because what are the issues that we're trying to solve, right? Because when, let's say, for example, the EA has a main trade and maybe that you risk $200, as the trade move in profit, when it starts to open the grid trade means the additional new trades, right? And if you do get stop out, your entire portfolio will still be profitable. That grid trade can be like 1 lot or 2 lots, you know, because you have your accumulated profit already, and the EA will keep on locking in the profit. The problem is that when we have too tight a stop loss, then you know you're going to be stop out very quickly. Okay, at a loss, but overall it's still profitable. But if you have a profit, then that 1 lot, 2 lots additional can be really a lot of money. Okay, so we are trying to find a good methodology to mix it so that it becomes, you know, at least still good. So that's the main problem that we are trying to solve. Okay, okay, so just quickly on what you want to just quickly to what is the term and conditions. Okay, so you need to meet a minimum $2,000 funding, you need to fulfill that 2.0 standard lots. Okay, and you need to you know, use our link, okay, to apply for an account. All right, and it applies to existing XC account holder. I'm just flashing these slides again. All right, now try to get the total cost before 10th of August. All right, because you need to open an account before 15th of August for XC in order for them to recognize that you are eligible for the promotion at this moment. Okay, so try to get the course before 10th of August, because on the 12th of August I'll be doing a crash course. Okay, so for existing students, if you like to do this crash course, you can write to us, we will give you the link. As I said, right, I don't really mind giving you all these things as long as you know you are our students, and I don't mind, you know, just having you to keep on revising, and I love that, and I love that you keep on revising. Okay, so this is the link to sign up for the course, or you can just scan it. Okay, the link to sign up for the course, or you just can scan it. Okay, all right, we can just review that again. I just try to be very upfront with you. All right, after you have gotten the course refund, all right, and if you should like to continue you use our services, then yes, you have to pay it after 12 months. Okay, but if you don't want to do that, you are fine. You can still continue to learn from me. I don't mind about it. All right, so it has been always a tradition that I try to practice. Okay, is the Alien Wash course unique? I don't think that you can find any books that's being written out there. Okay, if there should be anyone who is going to present in the same manner, I think they have copied from me. Okay, all right, so let's give you that summary of what you need to do. I'm just going to put it here so that you can take a photos or you can just scan it. All right, most important for those students who are not with who have not attended my course or not our student yet, you can try for the indicator trial that plots that wash and rinse. Okay, so you can get that trial here under this link, which is under this free TOR 5 course, right? And try to pay before 10th of August if you can. To get that refund, it's really to me a super good reward to Reits. Okay, because not only that you get the course, you get all the supporting indicators as well. Okay, so for example, the TOR indicator, the auto box, the EA as well, and any new upgrades of the EA as long as you have the existing subscription. Okay, all right. All right, now let's go a little bit quickly. So just to have a bit of an idea, all right, on wash and rinse. So I just want to revise this, okay, because there are new students who are with us and they might not, know what is wash and rinse about, because I'll be covering a little bit of this later on. Okay, so when we talk about wash and rinse, all right, it means that we are looking for example, a candle. This is for cell, so this is a cell setup, okay, a short setup, all right? So when you see and plot that TOR 3.0 indicator, you can find this either green color arrow or red color thick, or arrow. So we differentiate very much via colors, okay? So when it's red, that's bearish. When it's green, it's actually bullish, all right? Now, so there was a pushed up, a wash, all right, and then it comes back down, and then we call this a rinse. Okay, what's important is the wash line. Okay, so the wash line is being drawn where there is a close above or there's a close below a previous bar. Okay, so it's simply as that. Okay, now why are we looking at wash and rinse? Because price has been artificially pushed up into a resistance, so we call this a resistance. All right, and then it hovers here for a while and it cannot stay above the wash line. It actually closes back down, so this becomes our sell place here. And this trade has gotten us about average about 500 to 600 pips across a lot of the yen pairs. Okay, so we do trade into the forex. So each pair is about maybe like 400 pips or 500 pips. So if you basically have traded, let's say 2 yen pairs, you might be actually getting 1,000 pips from this trade. Okay, so do take module 1, which is free, because in there we'll be covering on what is wash and rinse. All right. Okay, so if you look at why you want to join us, then it's because we have this update in our group. Okay, so as and when I'm not that busy, I'll put up videos, put up chart analysis to help you to look into the type of trades. All right. Okay, so the recent one that I posted was a trade into oil. I'm not sure whether you guys have taken this trade, but I think that it's not only about telling you the tips of what to trade. It's about actually explaining to you how to do it next time. Because to me, trading, we have that same theory, same knowledge, but how come that some people are successful, some people are not? If you read a book, you gotten that knowledge already. Why is it that the other person who read that book isn't successful? I think a lot of things, right, has to do with experience. Okay, so in all this training, what I emphasize is in experience. Okay, the passing of experience here. Okay, so for example, why is it that after a move down for oil, for example, after this move down, I want to look into here, especially this portion here, to do a sell limit? And why is it that this sell limit is successful? I explain all this in the video. Okay, so you have done this trade in oil, and I've also said nitty-gritty things about not to be too tight in terms of your limit order, give it a bit of buffer, and explain why already. If I've done that, that is actually a very nice 8% drop in 2 to 3 days. In fact, a lot of you guys actually wrote to me and say I didn't have my limit filled. Okay, so never mind, let's try again next time. Okay, now then let's move into the proper now of why I want to have a look into the 10-year U. Okay, now just to give you a little bit of a background, earlier, last year in December, one of the session, which is the market outlook session, okay, I've talked about why we are bearish into the US indexes, okay, why the stock market will correct. Okay, so what was presented then was to present into COT, Commitment of Traders Index, okay, to talk into about the VIX of VIX. Okay, so we are not looking at VIX, okay, which to me is not too useful. We are looking at the derivative of VIX, which is the VIX on VIX, and then also how to calculate how much the US indexes will drop or any of the indexes will drop. Okay, so am I correct? I would say yes. Okay, but I hope that if you have attended that session, you have actually rebalance a bit of your portfolio. Okay, now then in June, what I did was to update it to our community the 10-year U. Okay, and specifically to look at the 10-year U together with what happens in our Tor signal. Okay, to come up with a potential reversal play into the US indexes and into the stock market, right? Somewhere in late June. Okay, and I said before that we need to take note of what happens in the quarterly price movement because of funds rebalancing. Now today I want to focus into 10-year U. Why? Because interest rate is something that's affecting us. Okay, in fact, that some of you been asking me what to do with your housing rate, huh? Whether you want to go on the fixed or variable. In fact, that one of my friends bought house recently, I think was last year. So she asked me, I told her that you must go and lock in the low rate because interest rate will sure go up. Okay, so in fact that she locked in the fixed rate, okay, the slightly higher fixed rate, and she had that as a good deal in a way if you look at it right now. Okay, now so why is it that you want to take a look into 10-year U, okay, which is the 10-year US Treasury U, right? Because it's how you want to allocate your money. Okay, so let's say for example, to an investor, if the 10-year U is high, okay, that means that let's say for example, 10-year U is right now at 3%. Now you would put your money into the 10-year U because it's one of the safest investment in the world. Okay, because then by putting your money into the 10-year U, then you get 3%. Okay, now when you have put your money into the 10-year U, then you don't have money to allocate to the stocks. Okay, because if you see that the money, $1, every $1 you have can only be put into one instrument at any one point of time, then by putting that into the 10-year U means that you don't have a chance to put into the stocks. Okay, and as investors, we are always looking at what is the best way to allocate the money. So for example, if FD, fixed deposit, at 2.3 or 2.6%, for example, in Singapore, right? Depending on whether you have a relationship or whether it's fresh funds, okay, or even 2%. Now, if let's say fixed deposit for 2 years, you put it and you get like 2.6%, would you go and take a risk to allocate your money and put it into a bond, okay, a corporate bond that gives you 3%, where corporate bond of 3% or even 4%, right? There can be a problem of, the bond prices dropping, all right, or there can be default and you totally will lose your money. Okay, so as investors, we are always weighing on different options on how you would allocate your money. Okay, let's say for example, if I'm an investor and I think that in the future the interest rate is going to drop, that means the 10-year U is going to start dropping already, then I would want to go and put my money not into the 10-year U because then in the future I think that it's going to drop. So therefore I would allocate the money and put it where? Put it into something that is undervalued or something that is going to have increased, right, in that percentage U. Correct? Okay, so for example, I just give you one example here. My mother called me because the auntie called her to say that the FD of a certain bank was very high at 1.2%. So they hurried to go and put the money into the FD. I told her, no, don't do that. You only put into FD when the FD is 2%. Okay, meaning that when you are being offered an fixed deposit of 2% or even higher. Okay, why? Because then when you lock the money in a FD of 1.2%, you can't break it. You can break it, but then there will be penalty, and then you lose the opportunity for that 2%. Okay, now, so this is why the 10-year yield at this moment becomes very important. Why? Because we are at that turning point, all right, where Fed and the central bank starts to do a rate hike. Then we start to wonder that rate hike is a fact, but we start to wonder when will they slow down or when will they stop? And investors are always looking forward, and so you want to have a look into the 10-year yield. All right. Now, I know that some people will look at the 2-year yield and try to find where they come together and predict into recession and etc. That is not that important. All right. Why is that so? So what if there's recession? Okay, recession is going to be just a name. So how is it going to affect the stock market? Okay, so that's a separate thing. All right. Now, more important is that the 10-year yield is actually a benchmark that guides other interest rate. All right. So for example, if the 10-year yield keeps going up, right, then you're going to find that other interest rate like SIBOR, LIBOR, might be actually heading up as well. Okay, so we and you find that even before, all right, that actual increase of the interest rate, okay, the bank has already followed the 10-year yield and moving up their interest rate charged to you, right, ahead of that actual increase. You're gonna find this happening to you. Okay, so if let's say the 10-year yield is gonna drop, will we see a drop in the bank rate? The drop will be slower, but the answer will be yes. Okay, so the 10-year yield becomes that guide for other interest rate as well. Especially, for example, what's important to you, your housing rate. Okay, my bank loan. So all these are all very important to us. All right. Now, so what are we discussing today? So I'm discussing why 10-year yield at 3.2 is something that you want to watch out for. Okay, I want to talk about the dollar index because the dollar index is something that I will talk about every session in my own class, right? But specifically to a lot of you who are not looking into the dollar index, I want to mention about it. Okay, so what is this dollar index? Dollar index is a basket of currencies, where that basket of currencies can let us know the strength of the US dollar. Okay, then I want to look into gold, because gold became very hot during the Russia-Ukraine war. Okay, but you start to see recently, because of the interest rate hike, right? The rate hike, gold actually starts to come down. Okay, but if you look at gold fundamentally, then will there be an interesting point that we want to consider? Okay, now again, that we moves gold, we talk about gold, right, in relation with what has been touted as digital gold, okay, which is Bitcoin. But Bitcoin is starting to lose its shine. Okay, so we want to evaluate whether there is actually an opportunity into gold, okay, into physical gold. I'm not talking about you buying physical gold, but basically gold. Okay, now oil is something that has been linked to the recent movement, okay, where analysts say that when oil is up or oil is down, there's a hint of recession. So we kept having that recession coming in. Okay, so I want to look into oil, and lastly into Reits. All right, whether there's any opportunity in the Reits, and then the stock indexes. So that's a whole lot of things to look at in this potentially 1 hour. Okay, so I'm expecting that I might end the session at 3:30. And if you want to review the session again, you can do it immediately after I've ended the session using the same YouTube link. Okay, now, sorry, let me just move on to the first one here. All right. Okay, now, this place here is the place that you get the 10-year yield. Okay, now you go into trading view. All right, and the code is US 10-year. Okay, so let me just type the code for you. You can see that US 10Y here is the code that you get that US government bond yield. Okay, so that's US 10-year. Now, if you type US 10, then you're gonna get the government bonds. Okay, but if you type with the Y, and you're gonna get the yield. Okay, so right now what I have here is the monthly chart of the US 10-year. All right, so you can see, for example, over the past few years, all the way starting from 1980s, right? The interest rate of the 10-year U of the US Treasuries, okay, it's about 14, okay, and right now is about 2.8. Okay, so are we at the, if you take a look at 30 years or even 40 years, right? Are we into the low or high of this U? We are towards the low. Okay. In fact, that what is important, if you look at the whole duration, starting from 2010, 2009, 2010, right? We've been doing that QE. Okay. US been doing the QE, right? The U has remained in the region of 3.4, 3.3%, right, to the low of around 0.5, okay, around here. So I want to focus what's happening recently. Okay, now if you take a look at the whole trend here, some of you might be drawing in things like an equidistance channel. Okay, so if you look at it from an analytical point of view, okay, if I would attempt to draw any equidistance channel here, right, then you might say, hey, look, the U has broken. Okay, so these might be some analysts or some people that might say, hey, look, we have broken out of the U. Okay, my stand is different. Okay, my view is that the U has been is right now very much resisted. Okay, so I work on a different way. That means that mathematically we evaluate whether each of the historical accent, that means that each of the historical rise, right, whether it fits into a mathematical statistical model. Okay, so one of the things that you realize that I like to do is I like to measure into each of the up move here, all right, and try to do a little bit of a projection. So if I do a bit of the previous movement, all right, and then each of the movement here, then safely, all right, I want to say that the USU is right now near the top. That means it is at a resistance. Okay, that means that the ratio of about 3.3 right now. Okay, that means what we've seen in the past, each high, all right, of a rate hike. That means that if you want to look into what happened in the past of each of the rate hikes. So 2018, there was rate hike. Okay, so 2018, we had the U went up to about 3.2, 3.3. So let me just do a bit of a marking here. All right, so it's here, around here. Okay, so that was what happened to 2018. Okay, now around 2013, there was another session. So there was another one more high here. So we are near to that historical level. So if you look at the trend, my point is that we are still very much in terms of that 10-year U, we are still fitting that downtrend. Although if you attempt to draw any trend lines, anything, all right, it seems to break out. Mathematically, however, it is still being resisted. That means that recent up here, all right, did not break this downtrend. Okay, so the U, in my perspective, for the 10-year U, has come to a high point. Okay, it is at the tip, at the high. We might see a little bit of a fluctuation here. That means that we might see price starts to hover. For example, we might see that price was hover here for a while. All right, but I do not think that we're going to go beyond that 3.5, the recent high that we are seeing here. Or I don't think that there is a chance for even 4 to happen. And all these are fitting into what the Fed is talking about right now. Okay, or not only the Fed, but the other central banks. Central banks like Australia Central Banks, RBA, like BOE, or even ECB, they're all talking the same thing. They're all saying that, okay, we are going to hike. We are telling you how much we are hiking right now. Okay, what is our endpoint? We let you know our endpoint. All right, but at this moment, okay, we are potentially looking at the data, but we let you know the endpoint, and we might be actually slowing down. Okay, so all this and all this, whatever they say, can be disturbance plus what the analysts are coming out and what the commentators are saying. But what I'm looking at right now is a fact of what is it? The fact is that the whole chunk here, okay, of that resistance in the U, and then in the recent up hasn't broken that downward trend yet. We are still being resisted. Now, it won't be surprising for you to find some commentaries to say that we are having a head and shoulder pattern, and head and shoulder pattern that looks like this one here. So let me just switch that to find a little bit, okay, my point. Okay, so they are looking at this head and shoulder pattern, this one here. Okay, so that's the mini head and shoulder pattern near to the high. All right, now, but some people might say, hey, look, the trend is going to continue and looks to be continuing higher. Okay, so we look at facts here. All right, now there seems to be a break of that neckline in this head and shoulder pattern. Okay, but even with a very good job data last Friday, okay, even with a very good job data last Friday, and at the same time, okay, we have this Taiwan and China problem right now, okay, and there are speculations that the Chinese has been selling US bonds, okay, leading to the increase in U, okay, of the US Treasury use. All right, now with all this, we have not seen a close of the previous high in the U. That means that we have a very good job data. Okay, the market did not reflect that increase in the U. In fact, that right, if you look into a mathematical aspect, right, of that movement, okay, whether this current trend is going to continue. Okay, same thing, right? What I always do is I ask myself, if this was a correction here, which is at a drop of 0.64%, all right, and then if I were to shift that, then are we seeing a change in terms of that trend? Okay, the answer is that recently the U did drop below the maximum retracement that we have seen. Okay, but even on Friday, it did not close back above that resistance level. That means it is still very much being resisted. Okay, so personally, I'm expecting we might see situation like with each of the narrative coming in or commentaries coming in, right? We might see a bit of a hovering of the U around here, but if it should continue to drop, and if it should close below this benchmark that I've given to my students, which is 2.5%, all right, then I think that the market is telling Fed ahead to say that you cannot hike rate anymore. Okay, because Fed is often reactive. Fed is often looking at what the market is doing, and the market is actually guiding Fed, even though you might find that each of the rate hike, the market reacted to it. But we've seen so many times that it is Fed who is reacting to the market. Okay, so therefore the benchmark here is about 2.5. So this is what the market is hovering here waiting. But if we should see with new data coming in from the US and should see that 2.5 coming in, that means 2.5 is actually broken, then I think that the U is going to start dropping. And the market might be giving out some commentaries, or there might be more views to tell us, hey, look, there might be a pause or slowdown in the rate hike, or even like what the market is predicting, all right, a rate cut in the first quarter of 2023. Okay, now, so having understood the U, then why is it that I want to look into the U, right? Because if you look at what's in the bottom here, so in the bottom here I have SPY, which is the ETF, all right, the exchange traded funds of S&P 500. Okay, I'm not measuring into NASDAQ or into Dow, okay, because I'm looking into S&P 500, which is the mix, like a mix of NASDAQ and Dow inside already. All right, now if you take a look into this in the past few years, where very important, right? I'm talking about where we start to see that U at 3.2% plus minus. Okay, so let me just point to you the location where we can see the U at about that 3%, right? Okay, so it's correlate with the movement of the market. Whenever we see that U moving up to that 3%, the market in the past, okay, point to a low point. Okay, that's the correlation here. In the past 12 years that that US been doing QE. Okay, now so that correlation can't be faulted. Okay, so you at the high, the market is actually somewhere near to the low. So that it's what we saw in 2018. Okay, now this place here in 2013, all right, then same thing, you was at the high, the market was actually at the low point. Okay, so right now we are seeing the you at the high, okay, is the market at the low point. So this is something that we don't have any insight. We can only use the past to deduce that. Okay, so the question is that, is the market at the low point and should we be actually going in? Okay, so I'll be covering a little bit more on this one later. So I just want to bring to you that apart from COT that I've covered already, apart from VIX of VIX that I've covered, then the U becomes an important component for us to evaluate again. Okay, based on what I've explained, why is it U is important? Because you take that money that's meant for the treasuries. If you think that the U is going to move down, should you actually take that money that's meant for treasuries, right, to put into something that is going to give you more returns? So it's always how you manage your money, how that money is going to flow. All right, so U was at the high, we saw a low in S&P 500. Okay, now coming to this, I just want to know whether there's any questions before I proceed, because I'm just going to move away from this particular chart already. Okay, no more. Okay, good. Now if you do have, then let me know. Okay, so I'm just going to show you one more chart, which is the Qs. Okay, this is just going to remove my slides already. Okay, now this is Qs that I've covered. All right, so I've been talking about Qs is the NASDAQ ETF. I've been talking about, let's not read too much in narratives. Okay, so narratives would be that they say, oh yeah, we are entering the bear market, this is the bear market, etc. So let's focus on the facts. Okay, so have you remembered that, for example, after COVID, you just hope, after the height of the COVID, back in 2020, just hope that you can buy a lot. Okay, you can just put all your money inside the stock market and then to catch this up move. Okay, now so those who were brave at that point of time, reap the benefit. And I am proud to let you know, at that point of time, I actually talked to my existing students, and I said before that, right, this is almost like the best place to buy. Okay, and specific what to look for and in which currency. Okay, I explained that in my classes, in my lessons, so many times already. All right, now so during that period, NASDAQ had a drop of about 30%. And this time round, I mean, I've updated you guys on how to look at it. All right, and then whether it is going to be a low. And if you take a look at the facts that was provided, NASDAQ dropped in the same amount, equivalent amount, slightly a little bit low, but rebounded from here. Okay, all right. And if you had followed, or even used the indicators, which is TOR 3.0, at around this region here, you will be seeing the buy signals, which means that it will be the buy that's being plotted here. Okay, so this is the reason why I encourage all of you to take that really super high reward to risk cost. Okay, now, but what are we looking at? Let's say, for example, you think that with the you think that with everything, right? You might want to invest. Okay, again, that as a disclaimer, I'm not asking you to enter the market. I'm just showing to you what you need to look out for. Okay, now, so in the current situation, let me just clean this one out, right? Okay, in the current situation, if you take a look at the day chart, the setting is very much different from the past. Okay, why do I say that? Okay, now take a look at in the past. In the past, let's say from 2021, okay, what we've seen in very simple analytical mode, right? That means that without having special knowledge. What we know is that these prices here have been moving up. Okay, so if you just look at each of the new highs, okay, highs versus the low, okay, so this is actually a higher low and a higher high and a higher high and then a higher low. Okay, but in 2022, which is this year, things starts to change, right? We start to see the switch, the turn, where this is a high, but this is actually a lower high if you compare to this point here. Okay, and this is not the first time that I've mentioned. Okay, so this is a low, and we see that, and then that's a lower low. Okay, each of the low as compared to the previous low is a lower low. All right, now, so at Nasdaq here, we predicted that turn. Okay, we said that, okay, look, that's about the 30%, 31%. We should be actually looking for some rebound here. All right, the fact is being presented here as that this is still a lower low as compared to the previous low. So this is still a fact. Second, now this point here is still a, that's where we start concerned about what is this point here. Okay, so is this point here a high? Yes, it's a high. But is it a higher high or is it a lower high? Okay, so that's the biggest question here, right? Whether it is a lower high if you start to compare with this one here. Okay, correct? Or is it a higher high if you compare with this one here? See that? So it's about your perspective, where you start to compare. All right, so nobody knows. Okay, because then if we see eventually the market is going to turn doom like that, right? Then say, see, I told you, that's a lower high. Okay, but if we see that the market is going to go up like that, see, I told you, that's a higher high, right? So it's up to whoever who said it to just going to come up. But then how do we make the decision here? Then we need to make the decision in a very precise manner. Okay, now number one, I don't know whether it is a high, which is a lower high, or a higher high. What I do know is that there is a resistance here. Okay, all right, that means that there is a resistance here, and buying here is just not the best deal. Okay, then this is something that I keep encouraging. All right, and I told you guys, right, no matter what my relationship manager told me, when it's at the high, I just do not know how to buy. But somehow, right, when it's here, they don't call me. When it's here, they start calling me. You know, it's very weird. I tracked that so many times already. I'm not sure whether you have this experience before. Okay, so I start tracking when they start calling me until they stop calling me anymore, because I say, you don't call me, I call you. All right, okay, so what is clear is that you want to buy, you wait for it to come back down. Okay, no matter what, you have to insist on this, whether it is coming back here, down here, or whether it has gone up and then for it to come back down. Okay, so this is the safer approach. All right, so with what happening in the 10-year U, when I suspect that it might be a high, in fact that I keep myself a little bit open. Okay, I'm still waiting for this correction. So as long as the correction will produce this is a low, right? A higher low. Simple way of analysis. We don't need to go through very difficult analysis, right? A higher low, okay, and have a bit of a rebound here. Then that's where I want to get a little bit more, in terms of my thoughts, a little bit more bullish about the market. Okay, so that's where, you start to suspect that there could be really a reversal coming in, and that's where you want to know that there could be a support here. Okay, so even let's say if you were to buy here, then at least you are not buying at the top here, okay, at about 320, okay, because that's a resistance. Okay, now even if it doesn't stop halfway, if it actually come back down here, then we start to wonder whether it will stop here or not. All right, so with that analysis in a 10-year U, I'm actually covering into the indexes, all right, to say that, hey, look, what you need to look out for. We need to look out for that higher low, all right, for that low point to happen again. Okay, so that requires a lot of patience. Okay, and the fact is that no matter how bullish we are here, All right, the fact is it is at the resistance. Okay, whether we are talking about the Qs or whether it is for the SPY, it is at the resistance, and I highlighted this resistance already to you guys during the regular lesson. Okay, all right. Now let's move on. If you don't have any questions, or do you have any questions with the indexes? Okay, if you don't have any questions, I want to move on to gold. Okay, because all these is a series of things I want to talk about in relation to the USD. Okay, but before moving to the gold, I just want to quickly, all right, go into DXY. Okay, that means that I want to go into the dollar index. And why is the dollar index important? Even if you're not trading into forex, even you are not trading into, let's say, gold, etc., even if you are trading into stocks, right, you do want to know the dollar index. Okay, so dollar index in terms of the code, right, is DXY. Okay, so what is dollar index, right? Dollar index is an index that measures into the strength of USD via other currencies. So what are the other currencies? Things like euro dollar, things like Aussie, the Japanese yen, the pound, and etc. Okay, so in this whole basket, the idea is that if dollar is to go up, then the other basket will actually come down, especially the euro. So when you start to see, for example, this is the dollar index, and it has been actually heading up, right, since the start of 2022, and in fact, since the start of actually mid last year. Okay, mid last year, it has actually gone up. Okay, it is one of the best trending trade to do. That means if the stocks isn't working well for you, then the dollar index is one of the best trade. Now, why is that so? It's a clear fact that the US is going to hike rate. And then if it's going to hike rate, then the best bet is to bet that the US dollar can go up because it's actually going to hike rate. And you know that the other central banks are going to follow the US. Okay. Now, so if you take a look into, let's say, euro versus the dollar, all right, then you know that euro versus dollar, when the US index was heading up, the euro dollar versus the dollar was actually going down. Okay, so we start to hear things like when the euro was at near to 1, we call that par. Okay, analysts start to come out to say, hey, look, you know, it's going to go to 95, 0.95. Okay, whether it will be true, I'm not sure. Okay, but the fact is that it stopped so far at par, at 1. Okay, so if you take a look into the US index, you start to have a bit of a feel, right, whether that rate hike going forward is going to be true or not true. Okay, because when we have a rate hike, that means the interest rate is going to go up, then it's going to cause, it's going to lead to a rise in the US dollar. Why is that so? If there's a rate hike, then people want to buy into the US treasuries. But to buy the US treasuries, you have to buy into US dollar first. Okay, the flow is like that. So you need to acquire the currency first before you can actually buy into the US treasuries. Okay, now, so even when we look into the Friday non-farm payroll data, okay, take a look at the Friday non-farm payroll data. Priced, it's still being resisted. That means it's still being resisted here, despite all the very wonderful data. Okay, so what I need you to do is I need you to actually watch the dollar index. Now, if the dollar index is to break into 107, that means that break above 107, right? Which is the recent resistance. Okay, around here, 107 is plus minus around here, right? Then there is a chance for the dollar index to head towards the 109 to 110 level. All right, so that's how we look at it. Okay, so if there is a dollar index heading up higher, then there is a chance that the market is on the renewed mood, all right, for the rate hike, at least until, let's say, September. Now, but if we start to see the dollar index into a resistance, that means we start to see the dollar index, right, into a resistance, okay, like this, okay, hit into here, and then it starts to have a bit of resistance, and it starts to come down, right? Okay, then we can sort of expect maybe, perhaps, right, the dollar index is going to move like that, okay, until further decision, okay, or in other way, the dollar index might be just forming a bit of a double top, and then the 105 becomes very important. So you realize that what are the few numbers here? 105 for the dollar index and 2.5 for the U. Okay, so all these are all important numbers that the market are not mentioning, but I'm sure that the fund managers, the professional people are looking at. Okay, all these indication. All right. Now, so watch out for this level, things like 110, or it can even do 111, because 111 was a very important numbers in the past when we were trading into the dollar index. Okay, why was that so? Because the dollar index, right, will move in a bit of like a how to say cycles. Okay, so things like 111 is around up around here, right? So that's this level here. Okay, so if you have been trading earlier, then you know that 111 back into the 0102 back then, right? So that was about 20 years. That was really a very important number. Okay, but so far we are expecting that probably it's hovering around here. Okay, so that's for the dollar index. Okay, so any question before I move on? Good. All right, so let's come very quickly into the next one. Okay, gold. So covered into what I covered in 10-year U, and I covered the U and the relationship with the stock market, the indexes. I covered also how to look for whether the indexes is going to be supported. Okay, we need to look out for that higher low. All right, and I covered the dollar index. Now I want to cover gold. Okay, all right. Now, why do I want to cover gold? Right, because I see again, I see money flow as, if you don't do this, if there's the money that needs to be invested, okay, the money will go and seek out the best value to do. The money I'm talking about is really huge money, like pension money or funds that must be invested. Okay, so they will be always on the lookout. What we want to do is not to be faster than them. What we want to do is actually rejoin them. Okay, so for example, if you take a look at gold, and this is a typical chart, all right, that for us trading in the tall, we are actually using. Okay, now a lot of time retailers, they will not okay, I'm not saying that all of them, okay, but many people get aware of things that's happening, right, only when when they start to see all these horizontal levels, all this high being broken, and even when it's being broken, right, and even when gold is about 1,004, 1,005, right, it won't be in the limelight. Okay, that means you won't read about it during the mass media. Okay, you'll probably starts to get a lot of coverage, all right, when it hit into 2,000, because then to the media 2,000 is a very important number that when you write about it, then that's where people will read it, read about it. When you talk about gold at 1,004, so what's the big deal? It has been hovering around there already. But when it's gold is 2,000, that becomes like, oh, something to look out for. So when you start to buy at 2,000, that's the problem. You realize that you're actually buying at the high, because then that 2,000, where it got people attracted, happens to be a historical high. Okay, so that's where I like to sometimes, go out and look at all these jewelry shop, right, to see whether there's people there. So when there's people there, a lot of people there, many people there, and gold is at the high, right, then I usually will walk away. So when gold is at the low, I also go and see, right, whether there's many people there. Later I'm going to the to go out and see the jewelry shop. Okay, maybe you want to try that as well. Okay, now so gold is here right now. It's at the low. Okay, so why is it that for US dollar we want to look at gold? Because this particular currency, gold versus USD, so is a gold price XAU, which is gold, versus the other currency. So it means that if I buy gold, if I put the money into gold, right, then I can't put the money into US dollar. Okay, so same thing. Let's say you have $1. If you decided to put the money into gold, all right, you won't be putting the money into the treasuries. So if you decided to put the money into gold, there must be a very strong reason why you don't put it in the treasuries. Because when you have physical gold bar, it doesn't return interest to you. That means that you buy a gold bar, right? And you put it under your pillow. There's no interest from doing so. You don't get that monthly or yearly returns, okay? So it takes a very strong reason for why would people put the money in a gold bar under their pillow. By the way, how many of you has gold bar under the pillow? Let me know. And also tell me where you stay also, so that I can visit you. Okay. Now, so the whole idea is if gold is at a low point and it starts to reverse, it tells a lot about people's thoughts, right, into actually the movement of USD and into interest rate as well. Okay, so while we start to see gold hitting a high because of Russia-Ukraine war, right? But when that war news starts to settle down, we start to see actually gold actually coming down. So what's the reason? The reason is because of interest rate. Okay, because the US has been hiking rate aggressively. Okay, so what I need you guys to watch out for is number one, is that if gold is right now at the resistance, okay, so gold is right now at the high. So I'm just going to draw that high point here, okay, and then to quote this into a red color bar. Okay, it's right now at the high, right? Then if gold comes back down again, and then it's gonna break this support here at about 1,680 plus minus around there, that's when we start to get the hint, okay? Whatever that I mentioned today is totally wrong. Why do I say that? Because if gold gives up this particular support, then what happened is that the market is still bullish on USD, okay? Therefore, it is still very much into the interest rate hike. Now, however, if we start to see, for example, gold, instead of breaking that blue color support here, plus minus around here, right? And what it does is that it can just hover around this place, all right, especially what price, okay? Especially in the region of 1,700 plus minus region. Okay, 1,700, 1,720 plus minus this region here. Then that's where we have a hint that even gold is recovering. The market is not believing that rate hike. The market is preparing for already that US is going to pause or slow or even cut interest rate already. Okay, so the level to look out for in gold, all right, is about 1,720.25. Okay, so I'm talking about this from a very slightly longer term investment point. Okay, not from the short term investment. Okay, not saying that there will be definitely ups and downs. Okay, but if you are looking at, let's say, a trending instrument, I'm not talking about stocks, but a trending instrument, an instrument that is near the high and didn't come down. I mean, if you take a look at stocks, like even good stocks, like even like Amazon, even Google, even Apple, then they drop like 30%, 40%. So that is a huge drop. Okay, and they are actually quite far away from the previous high. But if you want to take a look at one instrument that is traditionally able, if we really enter into recession, okay, that is able to still shine in a recession type of economy, all right, still bearing in mind with that movement in interest rate and dollar, etc., then I think that one of the instruments is actually gold. Okay, and gold, from that fundamental point of view, if you have a look, right, it is right now being supported off the previous high. Okay, and is right now at the low of the range. Again, the disclaimer would be that if the blue line of support gives way, then the perspective would be different. The gold would be forming that double top. At this moment, it is not, and therefore, I'm actually looking back into a retest here. Okay, now why do I want to bring up this is because I've said this many times. I do not know how to buy things where it is at the high. Okay, so I start to look at things, right, when it's at the low, when in that contrarian view, but yet it's still meeting that bigger trend type of a movement. So gold fits that type of a bigger trend, is still up, but is right now at a discount type of things. Okay, now any questions to gold? Okay, don't have. All right, next, let's take a look at oil. Okay, now the oil I'm looking at is the US oil, which is actually WTI, Western Texas oil. Okay, there's this UK oil, all right, and British Brent, and there's this US oil, but they moved in the same manner, just that the price is slightly a little bit different. Okay, now why do I want to have a look into oil? And oil is one of the instruments that I like to trade. I've traded, and I find that generally the movement is quite nice. Okay, now so to recap, what is the latest headlines, okay, of oil? People have been using that. If oil is down, that means that there could be a potential of a recession, because people are not that bullish in terms of the economy, right? So why, if there's a recession, why is it good for the stock market? That's because it's a bit weird, right? That because that the Fed will not be able to hike rate that aggressively already when there's a recession. Okay, when the data is not good, the Fed will come out to do QE again, and then they will stop hiking rate. Okay, so oil becomes like a bit of an economic indications that the analysts or the world is watching. Okay, but I have to say that in terms of the usual fluctuation in oil, it has to do a lot with demand and supply. Okay, and it reacts very much with news such as whether the OPEC Plus is going to cap the supply, and etc etc. Okay, now one of the things I look up for, okay, very much, right, is quarter to quarter movement, and that's helped me to plan for my portfolio. Okay, why do I say to plan for portfolio? In fact, that because of my analysis in gold, all right, and analysis in the matter. Last week, I've actually gotten into some matter stocks. Okay, that means that instead of focusing into the tech stocks in US, okay, or in China, because the tech stocks I mentioned end of June. Okay, so I've been looking at the tech stocks. Okay, night round is the early August, right? So in fact, last week I've been actually starting to get into the meta stocks already. Okay, so that's also the reason why I encourage that comprehensive view, okay, of looking at things. Right, so if you take a look into oil, then what's interesting in oil is that based on the end of the week, then oil broke very important price level. Okay, why is that a very important price level? If you take a look at just like a line chart, okay, so these are the closing price, and then this point here, we know that if you just look at the line chart and the closing price, right, this is essentially a wash and rinse, because price close above this high point here and then cannot stay above it and then come back down. Okay, now if you switch that into, let's say, a candlestick chart, you'll be able to find that this pattern here looks like a double top. Okay, that means that you see this was the first high here, like first top here, and then followed by the second top. So what's important in a double top consideration, theoretically, will be your neckline, isn't it? So these will be the neckline here. Okay, so there was a first attempt at this point of time that for oil to get supported in this neckline. So the first time that you tried, right, it tried to boom, and you know the first knock, it starts to rebound. Okay, so as of last Friday close, right, it tried that second knock, and it actually closed below this neckline. So this, to me, looks like a double top. But sometimes when we have a pattern that becomes very, very clear, Okay, and that's where the market will starts to play a little bit of trick. And what kind of tricks here? They will starts to hover here to test you, or even starts to move up a little bit. But this pattern of a double top here, all right, is about 2 quarters. Okay, 2 boxes here, right? 2 quarters. Okay, so that's why I think that we need to take note of this, especially if you look at the overall movement, then oil is indeed, right, near to the historical high point. Okay, so that's the historical high here and here. Okay, now again, I just want to have a bit of a disclaimer. Okay, now there is an equal chance, a possibility, right, for a breakout to be fake. Okay, meaning that when that pattern becomes too obvious, like this double top, right, becomes too obvious, what will happen is that price might just sometimes just close up, okay, above that neckline. Okay, and that becomes like a buy for us already, because then there's a wash and rinse, right? So right now, based on the week close, yes, it is showing bearishness. Okay, again, if it is showing that bearishness via price, then what the market, if you follow the commentary and the headline, then if oil is down, perhaps that we are having the recession. If we're having the recession, then the US cannot hide. Okay, if we go along this chain of thoughts. All right, so when this happens, okay, then as long as it doesn't close above that neckline, okay, the green line that I've drawn here. Okay, I want to disclaim a little bit. Sometimes it can have a bit of a spike up here, but eventually still close back down. Okay, so that's where I need to update you guys again. Okay, but so far from oil, there is this close, all right, and it closed below that neckline. It closed below very important price level, has made itself look really very bearish. All right, now, okay, all pointing to, again, another the common theme that I'm trying to say here. We might be the market might be starting to relook into the stock market, and then we might be having a little bit of a switch, right, from that ultra bearish mode, a little bit of a switch from that rate hike, it's going to continue on type of the mode, right, to switch out into a bit of a mild narrative to say perhaps we are really coming to an end or slowing down. Okay, so do look out for September statement. Okay, September statement would be very important, because that is really like the turning point, right, for the next quarter already. Okay, all right. Now, so I mean, if you look at this, and if you look at what happened to our trade, okay, and if you are in our group, and that's the reason why I want to say, right, it's really a no risk, high reward to risk type of trade if you join us. So for example, I posted, if you track the Facebook, I posted a sell limit in oil here. Okay, that means that to give you that exact arrow, okay, the sell limit was posted here, okay, at this price before it spiked up. So there was a sell limit, and if you have done this trade, and that is a very nice gain, because you managed to sell right into a resistance. Okay, all right, I'm not sure any of you have gotten this trade, but I was very, very clear. It was a sell, and a sell limit must be given slightly lower with a bit of a buffer. Okay, and you know why? Because we have all these wash lines, and this wash line gives you that reference already. Okay, so based on the weekly close, the oil is really reinforcing into that statement, that view that we might be either they're gonna hype on oil pointing to a recession, or either they are going to talk about oil, telling us the economy might not be very good going forward. Okay, now any questions in oil? Okay, don't have. Let's just quicken up a little bit. Now, before that, right? So this is our Facebook. Okay, just to let you know, on the 3rd of August, see, I mentioned about oil, exactly how to do that. Okay, so this is only for our paid students, meaning that you have paid for the course, you're actually inside this group. Okay, the nice thing is that I don't really remove people from this group even after your plan has expired. And that's where you can continue to get that training. Okay, but don't abuse it, huh? Okay, so the next main topic, right, would be I won't be looking at BTC. Okay, today I won't be looking at BTC because I want to look into the REITs. Okay, no, oil down, stocks is not down. I said before already. If oil is down, then the market is going to use this as an indication of recession. If there's recession, there is a chance for the rate hike to the interest rate, right, not to go up, and therefore overall it's beneficial for the market. But oil down is not good for the oil stocks. Okay, so that's how you look at it. Not for stocks, but only for oil stocks. Okay, now the next one I want to have a look, right, is REITs. Okay, now why? Because today we are talking about interest rate. Okay, now interest rate is REITs is sensitive to interest rate, right? So we've seen the REITs, right, actually going down. Okay, and one of the key index of looking at the Asia Pac REITs, I'm not talking about US REITs, because the Asia Pac REITs, right, and the US REITs, the returns is a little bit different for the dividend, the yield is different. Okay, so as a whole, the key index to follow is this MSCI Asia Pacific REITs. Okay, but it doesn't have really a lot of charts. Right, so if you take a look at the accumulated gross returns, okay, adjusted to Fed rates, okay, so the REITs has been actually going up, but recently it's dropping. Okay, so in terms of the blue color line, you see that is starting to drop. All right, now, so most of the time we move for the Asia Pacific REITs, right, it moved very closely to the benchmark, which is Asia Pacific Index. Okay, but I want to show you in terms of this index performance. All right, for year to year, the REITs has been quite year to year. Okay, has been quite still dropping. Okay, but has been quite resistant to its drop. Okay, and the average yield of the Asia Pacific REITs, later I'll show the component, is about 4% with the P ratio of 16.2. This was updated in 29th of July, so it's a very recent piece of data. All right, now if you take a look at the year to year, they have been falling in about the same situation, but suddenly 1 month in month data, okay, Asia Pacific went up 1.8%, but take a look at the rebounds of the Asia Pacific REITs, it actually up 8%. Okay, so if you are looking at interest rate and then investors, okay, funds being forward looking, all right, then they are definitely looking at a certain sector right now. Okay, so within a stocks, a specific sector. So if we link back and say, hey, look, what is that sector that has been badly affected by the rate hike? That's the REITs. And if the rate hike is not going to continue, or it's going to slow down, it's going to stop, then which sector is going to be that oversold and is going to be very, very beneficial? That's the REITs. Okay, all right. So I don't have enough data to tell you that going forward, what is the 3 months, because that data is 29th of July, and it just went up like 8%, okay, in the month of July, June. So we are seeing that REITs are reversing. Okay, now, so if you take a look at the components of this MSCI Asia Pacific REITs, okay, then 2 REITs are in the top 10 constituents. Okay, now 2 REITs in Singapore. Okay, one of them is CapitaLand Integrated Commercial Trust. Right, the other one is Ascendas REITs. Okay, so in terms of the index value, they are about the same, near 5.6 and then 4.8. Okay, so this top 10 constitutes about 68% of the index. So that's a huge percentage already. So to me, you look at this 10 REITs here. Okay, now 2 of them from Singapore, the ratio is about 10%. All right, but I think that this piece of data is like a hint that perhaps, right, we might be having a little bit of a reversal. Okay, now the next one is this ETF that's listed in Singapore. Okay, I don't want to show you individual REITs, okay, not in this session here, but I just want to show you this Nikko AM, where it's having this Asia Pacific. So just now the other REITs it's is the broad index, okay, but this one is Japan. Okay, but I just want to show you that yes, as a basket, it has let me just show you the component. It has the high component of the MSCI REITs, okay, with Ascenders and CapitaLand. Okay, the only thing that it added, right, is Hong Kong Link REITs. The rest are mostly in Singapore. The other one is Embassy Office Park REITs. Okay, that's not in Singapore. The rest are all in Singapore. So I would say that mostly the top 10 holdings are Singapore REITs. Okay, now if you take a look at the charts, what is the most significant one that you see here? Okay, now all along it has been actually going down. Okay, in terms of trend, that means starting from we know about the rate hike, right? Starting from last year in around July period, it has been actually going down. Okay, now this time round something happened. Okay, number one is that the high here seems to be going higher than the previous high. Okay, although it's still very much in the downtrend, the high here is still going as a previous high, right? It has all these lows, right, that during the recent climb, okay, it seems to wash and rinse all this low here. Okay, so what I'm actually looking at is I'm actually looking at generally, all right, for price to come down. Okay, now why is that so? Because if you take a look into the average yield of the REITs, it's still at about let me just find you the yield. It's about 4%. Okay, the average yield of the REITs is about 4%. Now if you take this to compare with FD, fixed deposit, some of you are telling me that you can get like 2.3, 2.6%, right, for some of the banks. So 4% versus 2.6, not really a big deal. But if price can come down a little bit, right, then you might have a better yield on average, and that yield might be in the range of 5 to 6%. So 5 to 6%, especially 6%, right, can be a huge difference to the 2.6% or 2.3% that you're getting right now for your fixed deposit. Okay, so I wanted to see a little bit of that coming in. All right, but as generally as a sector, that means that as an industry, as a sector, as a huge round of stocks to look at, right? Then I think that the REITs are recovering better than the individual stocks as a whole. Okay, and of course that I'll be monitoring that the REITs as a whole must not make new low. Okay, now why do I say that, right? Because during this period here, the REITs actually had a bit of a low point here, right? And it gets nicely supported. Okay, so it mustn't, as a basket, break new low. All right, so that's update into the REITs. I won't be covering specific what type of REITs that we are looking at. Okay, but as and when. Okay, as I went during my regular sessions, okay, if I find that some specific REITs, good ones, okay, especially those that are in the index or those which are inside funds, okay, are at an attractive price, I'll just bring out to you. Okay, where to purchase MSCI, AC, Asia Pacific REITs? Now this is the index. You can't actually purchase it, but they are ETF that tracks this index. For example, if you want to buy that, then you have to go to 3212 or 3121. See, the numbers is listed in Hong Kong. This one here, 3121, China Asset Management, MSCI Asia Pacific Real Estate ETF. Okay, so this one tracks into the MSCI REITs. Okay, but you have to buy in Hong Kong dollar, and you have to buy in Hong Kong exchange. All right, so that's why I think that if we are in Singapore, it's better to buy into some of the REITs ETF if you don't want to choose. Okay, so these would be some that you want to look out for. Not necessarily that I'm actually talking about Nikko AM, because there is also another Reits ETFs. Okay, is it one or two? Another two more? I think so. Okay, so you might want to generally look into Reits if okay, that interest rate hike is going to slow down. Okay, all right. What have I not covered? Let me just check. And the stocks indexes. Stocks indexes I have generally covered a little bit. Do you need me to cover specifically into other stocks indexes? Or any questions that you want? Okay, let me just look at this one here. There's one question on oil and gold is meant as a hedge against inflation. Okay, that's very good observation. And then oil and metals, gold are correlated or inversely correlated. I don't think that there is a very clear relationship between oil and metals. I don't think so. Okay, they are all different. Okay, different aspect. Gold is meant as a hedge in a way that if the market is generally not doing well, then gold is more like a hedge. You know, buy gold. But oil is more like towards like where there is a demand and supply issue, and also to point to economic growth. Okay. Okay. All right. Let's look at a few index, Hong Kong 50 and China A50, right? Because I also don't want to hold you guys back too long. So Hong Kong 50 is HSI. Okay, so usually my students will be looking into this place here, huh? It's easier for us. So because of all these boxes and etc. All right. So Hong Kong 50, which is HSI. Okay, so the key thing you want to take note of is this one here. Okay, so this it's almost like a support. If you do HSI, right, it's nearer to this support here. That means it's nearer to the low of this channel. Okay, so I'm thinking that it should be a range bound. Okay, all right. And remember, we talk about the price, the currency US dollar versus CNH. All right. And I was tagging a 7 to it. That means that high of 6 to 7. All right. And if we see that numbers, then there's a chance for the Hong Kong and the Chinese stocks to actually head up already. Okay. Now, I will update again whether this number is still I'm looking at. Okay. At this moment, I'm still looking at this number. But in any case, right, if there is a earlier than expected pause of this interest rate or slowdown of this interest rate causing a movement in the US dollar, then I'm actually thinking that the Hong Kong and the Chinese market will actually be heading up sooner and not be tagging into the 7 region. All right. So if this is the case, it's difficult to predict from here, but I can only say that if it ever comes down to the low of the channel, right, then it doesn't make a lot of sense, right, to be selling it. Okay, why? Because in terms of each of the market, right, what I always do is I always ask myself from the high, all right, how much has it dropped? Okay, so this is human behavior. All right, and this is also a very simple method that a lot of these fund managers are looking at. Okay, generally, if the stock market move in cycle, it has dropped to a certain levels which are very attractive, then they would want to actually buy that. It's just a matter of time, and you have money to park and wait there, right? Why not while you're collecting dividends? Okay, so same thing here, right? For the Hong Kong stocks or Chinese stocks, right, then it is near to a low point. Okay, there isn't probably much change in terms of how I would look at it. It's still very much near to the low point. It doesn't really make sense, right, to be too bearish into a general stock market where it's really very much near to the low already. Okay, so same thing for CM50. All right, so this is China A50. I think there was a question earlier in my regular session about buying China A50 here. All right. And I strongly said no. I give you the reason why we are not looking at a buy. Okay. So that was the reason. Again, coming back, right? Your RM will always ask you to buy here. Okay. So if you bought here, then you'll be buying very much near to the high, isn't it? Okay. So but when it's here, the RM don't call you anymore because you rejected buying, right? Okay. But if you take a look at this, then okay, and I mean if you draw in the equidistance channel, for example, then you are very much right near to the low of that channel. See that? Okay, so this makes it like a point that you want to look out for. Okay, and it has actually dropped quite substantially already and near to a low zone. So I think that this is a place that you might want to look out for. Okay, not be too overly bearish. Okay, really consider for a little bit of a long term. Okay, all right. I think I'll answer a few questions together. Like, can I give a bit of an insight into China market or update where the Hong Kong market is right now? My stand is it is really not worthwhile, all right, to be too bearish on the Hong Kong or the Chinese market. Okay, there might be fluctuations, there might be disturbance from the headlines, such as China versus Taiwan and what all these what mass media would show, right? But to be overly bearish, you are right now very bearish at the bottom. Okay, so I think that we need to track into the currency movement of dollar versus CNH. Same thing. I still stick to that. If dollar versus CNH is near to the high, is the low of the 7, like for example 6.9, 6.95, or even 7, 7.01, 7.1, it's time to look at the Chinese and the Hong Kong market. We are really not there yet, but if we should be there, then it's time to look at it. Okay. Do you think S&P and NASDAQ recent reversal is short-term or reversal? Yeah, you know, I mentioned already in the S&P slides just now. This was, you know, if you have used Tor, right? Tor, the buy was here and I updated. Okay, one buy here, and I did a recording with the US 10-year U and I talk about it here. Okay, and I also said that the resistance is up here. That means 4,100 plus minus around there. All right. And personally, I think that it's gonna drop. Okay, so I said just now, right? We are looking for it to really come down to see whether it gets supported around here to make a higher low. Okay, so only when we have a higher low being made, that means that for price to come back down to make a higher low, then we can be sort of more confirmed whether it is truly a reversal. So at this moment, my stand is that number one, based on all the various indications, is likely that the interest rate is likely going to slow down in terms of its hike. Okay, what is the implication of a slowdown in terms of the interest rate? All right, I've mentioned that already, and the correlation between the indexes. Number two, I also said that if it is true, then we will not be looking immediately to buy now, because then right now it's at the resistance. So to confirm, we need to see that price is going to come back down. All right, so to see that it's being supported. So you can review the earlier sessions when I talk about the interest rate, the U, and the relationship between the US indexes. Okay. Just now I mentioned about Meta stock, MT4 Meta stock. Is it because of this Meta stock? MT4? Meta now, is it Facebook? I don't know, I cannot remember already. Okay. Any other questions that you want me to mention, or I just end the session here? Now, do give me a bit of a feedback, because whether you like this type of a updates, you know, because when I do this updates, right, I'm actually doing it for myself. Okay, and it just takes about 1.5 hour of my time. Although we need to update you, etc. Okay, so if this is something that is very useful to you, do let me know so that during my free time I can actually arrange that. Okay, as long as it doesn't need me to prepare a lot of slides, etc., then no problem. All right. If you want to join the Facebook group, right, there is in the onboarding email. Okay, onboarding email. It document down the steps. You need to do 2 steps. One is to request to join, another one is must submit your Facebook ID to us. And where to find the Facebook ID is all there in the onboarding email. You have to do these 2 steps, huh? Otherwise, we will not let you enter. Okay. Metal stock or metal stock. Yes, metal like copper, gold stocks. Yeah. So in fact, I just entered a copper stocks. Yeah. Okay. So before I end the session, all right, I just want to encourage for those people who are not in my course. Okay, number one is that do subscribe to the channel because I do update that. For example, we predicted the US indexes drop, and then I will show how do you know how much it's going to drop. Okay, do join our course if you can. Anyway, as I mentioned already, it is a super good deal. All right, if you haven't had that, for example, just to show you a proof, right? On June 27, I mentioned this okay, S&P fell by 24%. Is there any opportunity? Analyzing, and it was actually around here. Okay, and after this, actually moved up. Okay, so a bit overload, yes. As I said, right? You have to get used to it. So there's a lot of things to be mentioned here. Okay, so I see you again next round, but if you can take the indicator trial I posted here already, and then sign for the cost. Okay, $700 I think is a very good deal to get it back. Cash is a cash promotion, that means you do get cash. Okay, all right. Okay, thanks a lot for joining. If you can, just don't miss the promotion. For the 12th of August class, please request via WhatsApp. The link is not out yet. Okay, we haven't generated the link. So I think that if you want, request on 11th of August. All right. So okay. All right. So I'm going out now. To go to the jewelry shop. Who wants to go? Okay. Thanks a lot. I'm just gonna end this session. All right. Bye bye.